The big story today is undoubtedly the 1.33% decline in the NASDAQ on that report today about OpenAI missing key revenue and user targets. So potentially significant, obviously, because of the enormous amount of money that OpenAI has pledged to spend on compute and the build out of data centers. And they have thrown out and committed to some large numbers, Joe. Initially, it was more than $1.4 trillion over the next 8 years. That was said by Sam Altman himself in an X post last November. They had scaled that back to $600 billion by 2030. The catch, of course, you can only spend that money if you have the revenue that you anticipate having. Otherwise, where are you going to get it? That's why companies like Oracle and some of these other big tech names and the chip names are all falling today, because they are on the other end of that spending. And that's why it remains such a big story today.
It sure is. And first of all, Scott, great to have you back with us. We missed you. But this is a big story. It's a big story in advance of mega cap earnings, where I believe the theme is, are you monetizing the spend? And I think that consistent theme can be applied to the news that we're hearing today. Now, I maintained a very bullish perspective heading into the end of the month. I'm going to maintain that perspective specifically as it relates to semiconductors and technology. I'm not stepping away from that. As it relates to the Mag 7, I am maintaining bullish perspective as it relates to certain names like Apple and Alphabet and Amazon. But I think the news that we heard today from OpenAI needs to be treated with a degree of understanding that maybe this is more about OpenAI losing market share to Gemini, AI, Alphabet, and then more importantly, losing the coding and the enterprise market share from Anthropic. And I really believe that's what's unfolded here. If we think about the valuation of what OpenAI was, or we perceived it to be in early 2025, when Sam Altman and Let's just go Masa.
Make it easier for you.
There you go. We're all sitting.
I'll make it easier for you.
Larry Ellison. We're all sitting in the White House, right? I think we've seen a dramatic decline in what the expectation on that valuation ultimately is, and on the other side of that, Anthropic is rising dramatically. So I don't think you make too much that this is some major inflection point in technology. I don't see that as what this is. Let's hear about the tech earnings as they unfold tomorrow and over the course of the next week and a half.
Josh, I guess we just don't know. You know, this has been a sell first, ask questions later kind of a market, when a perceived earth-shattering headline comes out. I don't care if it's like a DeepSeek type thing, and not that to say that this is anywhere near the kind of sell-off that we saw back then, but a headline and a report like this kind of makes you question a lot of different things. OpenAI has made a lot of commitments and promises on the amount of revenue that they are going to generate, and thus the amount of spending that is going to filter through the web of companies that we have talked about every day in large degree, which is why those stocks have all done what they've done since OpenAI was throwing around $300 billion to Oracle and $250 to Microsoft and $138 to AWS and CoreWeave, et cetera, et cetera. So if that doesn't actually come to fruition, you got a problem. Today's probably too soon to make that judgment, but the market is at least reactive to it.
I think what this does is it casts some doubt about where the different runners are in the race, but it would be a much larger story if it were saying something about the race itself, and it's not. The race is still the race. We know that there are some issues with OpenAI and with ChatGPT, and specifically with Sam Altman. We also know that Claude is kicking their asses in the enterprise. And the funny thing about that is that, what do you think happens to the people who spend all day at work with an enterprise license for Claude when they put their hat and coat on, leave the office, and go home? What do you think they do with their own personal, quote-unquote, consumer use of AI? You think they just totally switch gears and say, and now I'd like to live the rest of my day in the ChatGPT environment? No. No. they use Claude at home. And here are the numbers. In March of 2026, Claude's monthly active users almost doubled, 88% growth. This is unbelievable momentum for Claude, and that's got to come from somewhere. And let's assume it's not coming from Gemini. There's only one other place of size for it to come from. Perplexity's not big enough, and that is ChatGPT. So when we see this Wall Street Journal story, Scott, what we really want to make sure we don't do is look at that and extrapolate it across the entire AI opportunity set, because it would be wrong. Claude had 202 million visits in January of 2026. That's an 18% increase over the prior month, not the prior year, prior month. Think about that kind of monthly sequential growth and understand this might just be a ChatGPT story.
Yeah, no, I think it's a fair bit of context to put behind it, Steph, and what we were already, I think, acknowledging that Anthropic has taken a large bit of steam in the enterprise market, and they have forced OpenAI to pivot, right? OpenAI dumped Sora, and they're like, we need to be more laser focused on the enterprise. And even some VCs who are, invested in this area would admit, like they have to me, either on this program or Closing Bell, that they see Anthropic as maybe more of a key player than they originally thought they might be relative to OpenAI. I mean, the context that Josh puts on it is pretty, I think, important. But as I said, the market in many respects is an act first, figured out later. Yeah. So I feel like we're in a little bit of that today. But, I mean, you do have a lot of chip names, Broadcom, which you sold recently, obviously.
Trimmed. Trimmed.
I
still own it.
You're trimmed, okay.
And I bought Marvell.
But like,
with the profits.
But like the reason why companies like Broadcom and AMD and NVIDIA have gotten such a big boost is because OpenAI was throwing around money like, they just won the lottery and ended up at Neiman Marcus. I mean, they were like just throwing money all over the place.
Not just them. Not just them. There's so many companies that are spending so much money. First and foremost, we know Mag 7, they're spending $761 billion this year, up 75%. They're probably going to spend a lot more next year, not on a percentage basis, maybe like 30 to 40%, but they're going to continue to spend. I would highlight Andy Jassy's shareholder article, came out a couple of weeks ago. He goes through why they are spending so much money, $200 billion, but their AWS revenue run rate is $142 billion, and 85% of the enterprises are still on premises. That is huge. There's still such a tailwind in terms of the spend that's going to happen. But let me just circle back to the OpenAI. First and foremost, they're actually denying it, number one. Number two, they just raised $122 billion in record funding a month ago. So do you think that those investors, if they thought that there was a slowdown, they would have been able to raise that kind of money? That, to me, is also kind of a confirmation that maybe this article is overstretched. The semiconductors, the SOCs, I mean, they're beneficiaries. All the companies are beneficiaries, but it's up 34% year to date. Marvell is up 80% in a month.
I know. Forget the year-to-date metric because it doesn't even It doesn't even prove the point that you're trying to prove. The semis are up because 44% year-to-date. It's up 34% month-to-date.
I know.
A lot of people were already saying that the semis were way too stretched going into this. This is like the perfect thing to put a little pin in the balloon.
Well, if you let me finish what I was going to say, I was going to say that exact point, that since the March lows, the market as a whole is up 12%, S&P 500, NASDAQ's up 17% from the lows, and semiconductors are up enormous. Marvell, I bought it a month ago, it's up 80%. Broadcom is up 43%. The SOX is up 34%.
SOX was up 18 straight days into yesterday.
Right. So I mean, this
you think
is
that's justified? Is that justified?
This is like an excuse. I think that we got a little bit of a blow off top, but I think the fundamentals are sure.
A little bit.
Broadcom is going to do $100 billion in AI by 2027 and has $30 of earnings power, and they have a whole slew. They lead the custom ASICs market. So they have Google and they have Anthropic and they have OpenAI, but they also have Meta. So there's a lot of customers that are paying a lot of money for their stuff. Maybe they're a little rich. Yes, maybe they're a little extended, but I do not think that the AI food chain is over by any means. And I think, by the way, the industrials are getting sold off hard today as well that pertain to the data center build. You're going to get some looks, some chances and opportunities, and I'm actually buying one of them today.
Oracle is one of the stocks, obviously, that is down rather significantly, at least. Well, it's off the worst levels. It's down still 4%. And Dan Ives is out today saying the bark is way worse than the bite relative to this story. We're hearing from Oracle, which I guess Seema is pushing back on this story. What are you learning?
Hey, Scott, we just heard from a spokesperson from Oracle who says they're dismissing the concerns around OpenAI's growth story, saying in a statement, we're incredibly excited about our partnership with OpenAI and remain focused on building and delivering the capacity they need to support rapidly growing demand. They add that we're seeing firsthand how quickly adoption of their technology is accelerating, driven by the strength of their latest models, adding that OpenAI's new 5.5 model is a significant step forward, and they expect continued momentum to access their technology as it expands across cloud providers. So, Scott, this is Oracle, in a way, coming out to defend its main customer that it has a $3 billion contract with, saying that growth remains intact, and they see this growth story maintaining momentum, with the stock down about 3.7%. Clearly one of the bigger movers here on this report from the Wall Street Journal.
$300 billion.
$300 billion contract over 5 years.
This is
its main customer, Scott. And I would point to the company's latest earnings report, where the company made a point that it continues to diversify its customer pipeline, but this is still OpenAI, their main key customer.
Yeah. Seema, thanks. Belsky, you own Oracle. Is the bark way worse than the bite, as Dan Ives suggests? Oracle obviously is going to defend their most important customer at the time being, which is OpenAI.
Right, we think so. We also think, too, that this arms race in AI, which I think it is, isn't just two companies. And Josh did a great job explaining what happened really since last year with all these other companies, Scott, getting involved in it. And I think so many people put their eggs in one basket in terms of AI. And I think that's why Oracle has been, we think, unjustly hurt, because at the end of the day, they still have a big balance sheet. They still know how to run this. And I think it was very smart for the company to come out and talk about that today. We've maintained our positions there just because we're a believer in that, just like we're a believer in Microsoft. But I think what's missing here is that it's very different. OpenAI talking as a private company, Scott, a while ago, and now we're marching toward an IPO, right? We're marching toward an IPO. And I think that's being lost in this discussion, because when you're a public company, you speak differently versus when you're a private company. And as Steph pointed out, you had hundreds of billions of dollars being invested on a monthly and quarterly basis.